G'day everyone, welcome to the weekly general update for the weekend of the 25th and 26th of August. And look, we've had a couple of great weeks and looking at all the signs, it looks as though it's set to continue. So a pretty good period that we're in just at the minute. So let's have a quick look at summary of last week. Just before we do, just a reminder, this is general advice only. So the S&P over the week actually declined 7 points, and that was pretty much expected, as I covered last weekend, because the S&P index had been going up for quite some time. So I said last weekend to expect a pullback this week. We got that, and as you'll see when we look at the chart, we got a reversal basically bang on the point that you would have expected. So market's being pretty predictable at the moment. So that was a 38% retracement point. So the expected pullback is finished, and the way that the market finished on Friday night looks pretty positive to me. Turning to the Australian market, we declined 21 points in the week. Of course, all of that was in the last couple of days following the negative leads from the US. And we're still in a mode of buying the dips. I still think the odds favour some more upside yet. Now, the all-important currencies, the US dollar index ended up down for the week, and it was down on all sessions except Friday night, where we did get a bit of a mild reversal off support. So again, the currency market's really behaving themselves quite well. They're finding support and resistance at the levels that you would expect them to. Whether this US dollar index follows through to the upside or not, we don't know at this stage, but certainly it doesn't look like it's going to come in and spoil the party at this stage. Now, bond yields also edged down a little bit further. Spanish 10-year bond yields were down to 6.4, so that's a lot better than it was just a couple of weeks ago. Now have a look at some of the commodities. Gold gained $55 on the week. It was a great week. We've been looking for a breakout for 15, 16 weeks now, and we finally managed to record that in the week just gone. And we also broke through some pretty major resistance in that process as well. And the HUI index, which is the major gold index for the world, is still trending higher, so looking pretty good. Now silver had an even better week. It was up by 10%, so a really outstanding week for silver. Finished right on its highs on Friday night. Now we will get a pullback, there's no question about that, so don't go barreling into silver just yet. There'll be a better entry opportunity, but silver looking very, very strong. Copper also a little bit stronger, up to $3.46, and anyone that tells you that the global economy is about to drop into recession, you've only got to look at the price of copper, and that certainly wouldn't be the case. Or copper wouldn't be at the level that it's at now if the world was about to fall over into recession. Oil finished steady on the week at 96. So let's have a look at a couple of those charts. We'll start with the US dollar index. You can see we've basically been within this trading range now between 81.5 and about 84 for quite some time. We had a little false break here of the dollar index to the downside on the 18th of June. We then had a false break to the upside, which is something that markets do a lot these days to basically sucker people in, the unwary trader. So we had a false break to the upside. I said at the time when that closed back into the range that we were likely to see the US dollar go all the way down to the bottom of the range, which it's done. Again, we've had a minor overrun. We've now got a double bottom and a mildish reversal, so you can't really draw a lot of conclusion from that at this stage. Now looking at the euro, I had 126 as the target area. We got to 125.84, so fairly close, but we still could push a little higher yet. But really a bit of a question mark over currencies. Now obviously if the US dollar index continues to fall, that will be positive for commodities and it will be positive for stock markets. Let's have a look at the VIX index. We had a little bit of a blip up on Thursday and into the early part of Friday, but again closed down under 15, and we actually got down into the 12s earlier in the week. So the VIX index still really giving us no sign that there's any kind of insurance being pursued in the market at the moment. Investors and traders would appear are pretty carefree at the moment. Let's turn to the US, the main US index, the S&P. You can see I've put a little Fibonacci scale on here of the last run from the low of the 2nd of August to the high of Tuesday night. That came in at 1398.9 and the US market declined to 1398 on Friday night and then reversed and closed up at 1411, pretty close to the highs. Now with the expectation of what's happening with the Fed, there's a meeting on the 31st of August where they could announce something. There's also their normal mid-month meeting in September. So either of those two dates could signal some additional stimulus from the Fed, and that will obviously be very positive for markets, at least in the short term. So I think the odds are that we could see a break of this 1422 mark and have a bit of a crack at 1440, and then above that we're looking in excess of 1500. So I'm not saying that's going to happen, but it's a distinct possibility the way that markets are setting up at the moment. Now the Australian market, we did have a broadening triangle opening up here. We've now gone beyond that. So the Australian market, we've got a bit of a pullback on Friday, but that will reverse, I'm sure, on Monday. And it's, when you look at the moving average envelope here, you can see that it's going up at a pretty significant rate. The two moving averages are tending to open out, which means that the trend is accelerating. So even though we are overbought short term in the Australian market, and that's largely thanks to the banks, the trend still is pretty positive to the upside. Now let's have a look at the daily chart on gold. So you can see the last 3 or 4 sessions have been extremely positive for gold. We finally broke out. You get a better look at it here on the weekly chart. We had this little triangle, well, not so much little because it spanned over 15 weeks. This triangle set up, I always said that the odds were that it would break to the upside, and it has. It also needed to break through this downsloping resistance line, which really goes back to the peak in September, and it also managed to do that on Thursday and Friday as well. So things looking very positive for gold. I am expecting to see a bit of a pullback, maybe to the breakout, so don't be surprised if we see gold back down at the 1625 mark, 1630 mark, but I think it's really shown its hand now. Now silver also had an absolute cracker of a week. Similar kind of triangle had formed up here. We broke out of it on Monday and it basically closed on its highs almost every session after that. So silver looking very, very positive. Let's have a look at the GLD, which is the main index for the main ETF. And clearly we had an uptrend here, but we really needed a close above the high of the 6th of June to really confirm that. We did that on Wednesday and kicked on Thursday and Friday, so that's all pretty positive. Let's look at the HUI index, which is the gold stock index, and you can see that clearly it's working its way higher. Generally 2 steps forward, 1 little step back, or a little marking time day, but the HUI index looking pretty positive. This is the 6-month spot chart on copper that we normally look at. You can see we've really been in this big consolidation zone, which really goes back to early June. and it's not really showing any signs of breaking down at this stage to my mind. So the overall strategy, the most likely scenario is, looking purely from a technical point of view, it favours the uptrend continuing, so that's where the odds are. I believe the Fed is likely to pull the trigger on some more monetary stimulus and or the ECB will as well. And we've got some key trigger dates on the 31st of August and the 15th of September. So they will have a very significant impact on markets. I then expect, as I've been saying for a few weeks, we will then get a retracement of the bigger picture. So we'll get a retracement of the bigger run that started in June. So I'm expecting that maybe we might see that in late September, early October. And then probably a pretty positive advance into year end, because seasonally that's normally what we see. And this year we've got the added US election in there as well. So in terms of current trading, it's really still a case of buying the dips. I think the market momentum is to the upside. So look at buying the dips. There is quite a lot of small caps starting to run now. But look, unless you've got a really clear game plan about what sort of signals that you look for, do take some care with the small caps, because if you go chasing the prices, you can end up getting your fingers really, really burnt. We use a very, very tight entry signaling system for small caps that works really, really well. But if you're just out there basically having a punt, then you might find yourself getting into a bit of trouble. So the small caps really showing some very positive signs. So that's it for this week. Talk to you again next weekend. Cheers.